Okay. Good morning, everyone. Good morning, students. I hope you can hear me clear and loud. Good morning. Okay, sorry, students. I just forgot to update the summary of and yesterday's file also. I was not well to be true yesterday, so I was not able to upload. But I promise you today, just after the session, I'll upload all the files. You will get it after the session. Okay. Sorry, I forgot to upload the file yesterday, but I'll upload it today. Okay, along with that summary. Good morning, Vishakha, Isha, Harshal, Vijay, Anchal, Tanu, Vedant. Okay. Good morning, everyone. Have you revised whatever we discussed yesterday? Have you guys revised? Have you read the TDS provisions? I think we covered till 194C. I think we covered till 194C, right? Sahil, I promise that it will be uploaded today, the summary file. Okay. Just remind me once after the session. As soon as the session closes, I will upload both the files. Yesterday's class file as well and the summary file as well. Okay. Don't worry. So let's start. It's 194H, Anchal, not 195H. So series is of 194. Okay. So now quickly, okay, if you have read, are you able to clarify all the concepts or there is any problem? Because this chapter I am explaining you, I'm not reading line by line, right? Considering the time limit we have. But yeah, I will explain you everything. So let's give it a quick revision in 2-3 minutes, whatever we discussed yesterday. First of all, we discussed the concept of the TDS, then collection of taxes through TDS, TCS, and payment of advance tax. Then we discussed whatever tax minus TDS minus TCS is your self-assessment tax you need to pay. Direct payment. So whenever a person is paying direct payment of tax, if the tax is not required to be deducted or liable to be deducted but not actually deducted, the assessee needs to pay their own tax, right? Deduction of tax at source, section 192. We estimate the annual income, calculate the rate of tax, then accordingly we deduct the taxes from the monthly salary, right? Employer has to deduct. Employee will furnish the details, the regime, whether the old regime or new regime they want to adopt. There was a question about the non-monetary perquisites. Non-monetary perquisites, if the employer is paying the tax, then it will not be deducted from the salary. And the tax on the non-monetary perquisite is not a deductible expenditure and not a taxable in the hands of employee. Next, we had discussed about perquisites 12BA form. If it exceeds 1,50,000 along with form 16, 12BA is also furnished. Employer need to obtain all the evidences. 193 was interest on securities. For the interest on securities, if it is exceeding 10,000 rupees, then interest on securities TDS is deducted at the rate of 10%. Then we discussed a concept. Then we had discussed one concept, that time of deduction at the time of credit or payment, whichever is earlier, or if you book any entry, then whichever is earlier, at the time it will be deducted. Non-applicability of TDS under 193. In some scenarios, 193 TDS is not applicable, basically in government securities, but in these securities which were listed here, TDS was there. Interest other than interest on securities, interest on banks and all, right? So 194A, time of deduction, same thing. bank credits daily interest for their own tracking, no TDS on this, but when they give it in the statement, then there is a interest. There is a TDS. Rate of interest, rate of TDS, 10%. Non-applicability. First, if the amount is normal, the amount is 10,000. If it is from the banking company, cooperative society, post office, the amount is 50,000. In case of senior citizen, 1 lakh. If it is below this threshold, then no TDS. And always you have studied the concept. Whenever the amount exceeds the, let's suppose interest is 1 lakh 10,000. So TDS will be on balance 10,000 or like complete 1 lakh 10,000. Let's suppose interest is 1 lakh 10,000. TDS will be on entire 10,000, entire 1 lakh 10,000 or balance 10,000. It will be on the entire. There are only two sections. There are only two sections that we will study where it is in on the balance. Otherwise, it is entire. We will come to it today. Then interest credited by firm partners in cooperative society. If it is a general cooperative society, they give interest to the other cooperative society or to the members. There is no TDS. But if it is a big cooperative society, sales exceeds 50 crores, then in that scenario, and the amount paid exceeds 100K in senior citizen and 50K in normal cases, then in that scenario, TDS is required to be deducted by the cooperative society. Else, in all these scenarios, the TDS is not required to be deducted. Then we discussed, after this question, we discussed online games. From online games, whatever winning is there, 30% is the TDS, right? TDS on withdrawal, whatever there is any balance in the account and remaining at the end of the year, then on that also TDS is required to be deducted. Net winnings, wholly in kind or partly in cash or in kind. Now, if there is a winnings in kind, then the agency which is giving the gift, the payer needs to ensure that TDS is deposited. Either you collect from the winner and then pay, or the winner pay the challan and they give you the proof. Power of CBDT to issue guidelines. They can issue the guidelines. They have issued the guidelines. Okay, if the per month winning is $100 in a month, so TDS is not required to deduct. But if it exceeded, then on the entire amount TDS is required to be deducted. Then the deductor has to ensure all these compliances are done. When the winnings are in kind, we have already discussed the scenario. In the scenario, how come in case of kind, how the value is determined? If online gaming company has purchased those materials, the purchase price will be the value of the winning. If they manufacture it, then at whatever price it is normally sold to the customer, that will be the fair market value for the in kind. Then payment to contractor and subcontractor, 194C. 194C says, if you are making payment to the contractor or subcontractor, then TDS has to be deducted, right? And if payer is this one, contractor is the pay, right? We will pay to the contractor. Now, if the payer is this one, or in case of individual HF, if it exceeds 1 CR or 50 lakhs. 1 CR or 50 lakhs is the income or the turnover? It is the revenue or the profit? 1 crore or 50 lakhs is the revenue or the profit? It is the turnover, not the profit. What is the other name of turnover we call it? What is the other name of turnover we call it? We also call it gross receipts. Can you tell me one more line in the in financial terms? Sales. One more word I am looking for. No. See, I said individual HUF, their turnover normally should be greater than 1 CR or greater than 50 lakhs. Now, first of all, there is one point I think I missed to mention yesterday. This we see for the last year. We are solving for previous year 25-26. We will check this limit. We will check this for previous year 2024-25. Clear? This is for the last year we check turnover. Based on that, it is applicable in the current year. Clear? So this is one thing I think I had missed yesterday to mention. These turnover limits you check for the last year, for previous year 2024-25. Because for the current year is 25-26, previous year. Clear? Now I asked you, this is not income. This is turnover. This is the turnover that we check. Other name of turnover is sales. Other name is gross receipts. There is another name in the financial terms, we call it top line. There is a word called top line and bottom line. When you frame the income statement of the P&L, When you make the P&L, here you write the revenue, and ultimately here comes the profit. Revenue is also known as top line. Revenue is known as top line. The profit is known as bottom line. Right? So this is how we call it. Okay. Next. Time of deduction, we have seen rate of TDS 1% in case of contractor is individual HUF, 2% in case of other pays. Subcontracting also same rules apply. There is a limit of 30,000 per contract or 1 lakh for the entire year. Definition of work, advertising, broadcasting, carriers of goods, manufacturing, supply, catering, all that. Now, if you are manufacturing, if you are doing some work on the material furnished by the customer or the related party of the customer, the sister concern of the customer, right? Then it is work. If you are purchasing yourself the material, all the materials and giving, right, then it is contract for sale. That is not covered. Does it mean, okay, let's suppose in my example, the tailor was stitching. Will the customer also provide the thread for the stitching and all? The answer is no. I'm talking about the main materials, the cloth, right? I'm not talking about the subsidiary tools or something that the contractor will themselves use, right? Next is non-applicability of TDS under section 194C in case of goods carriages. If the transporter has 10 or less goods carriages, he is in the business of flying, hiring, or leasing goods carriages, and has declared the PAN number, then in that scenario, TDS is not applicable. Again, one more thing was there. TDS is not applicable on the personal use items, personal goods, right? If you have purchased, paid, you have asked, if there is a for personal purpose, payment is for personal purpose, no TDS is there in 184C as well and J as well, that we will come. Important points, this doesn't cover contract of sale of goods, and this 194J is covered for the payment to professional, and whichever credit or payment, whichever is earlier, we deduct the TDS. So this is we covered yesterday. Is everyone clear till here? Is everyone clear till here? Okay. Students, one thing I want to ask everyone. See, the topic we have today is comparatively a long topic. One way is I can explain you the topic and do not read the book. Like yesterday also, I didn't read the complete book, but I have read it multiple places. One way is I only explain you the concepts and I don't read the book. Or if you want me to read the book, I will extend the session probably by 1 hour today. So what do you think? I should read the book, or I can only explain and you can read the book at your own pace? Harshal says only explain. Anchal's explanation plus book, both. What I would suggest is, I would suggest to read the book as well, because it will help you to link. Okay, I will try to make it a mix, right? See, I don't have a problem in extending the session, to be true, but I want to read it so that, see, I don't want to go in a fast pace so that you're not able to understand. I just want to take the session for the sake of taking it. At least if you are able to understand, then only the session will make the sense, right? So we will again use the yesterday's approach only. So I will read the important concepts and then explain you the rest. Okay, it's like yesterday, we will do today. Okay, let's start with 194H. 194H is about commission. Let's suppose (194H) is about commission. Again, same concept. Let's suppose if a person is, if any person is paying, if this is paying to any person commission, This is the deductor. This is the payer. They are paying commission. What is this commission? Commission is on, let's suppose this person, let's suppose this is an individual. This is an individual. This individual is helping this company. Let's suppose this is the company. This individual is the agent. Let's suppose this individual is helping the company to procure the materials. He is taking commission on this. This individual is helping the company to procure the materials or do the sales, whatever it is, whether he is the purchase agent, sales agent, or something. He will get the commission for this deal. On this commission income, whenever the company will pay to this person commission, they need to deduct TDS of 2%. They need to deduct a TDS of 2%. Clear? Now here, who all are covered in the pair? All assessees except individual HF. An individual HF whose turnover is greater than 1 CR or 50 lakh is covered, right? So if any assessee, any person other than individual HF, an individual HF whose turnover exceeds 1 CR and 50 lakh are covered, they pay to anyone by way of commission. They pay to anyone by way of commission, then they should deduct a TDS of 2%. They write here one thing other than insurance commission. Why they are writing this? Because for this we will have separate section. For this we have separate section. There is a separate section for this. I'm just not remembering the section number. We will see it today. Okay. There's a separate section for it. That's why they are writing other than insurance commission. I think 194DA something is the section number. Time of deduction 194D. D or DA I think is that, right? So the deduction shall be made at the time income is credited or the payment is made, whichever is earlier, or the suspense account. What is the threshold? Threshold is 20,000. If the commission paid is more than 20,000, then is there. What is the commission brokerage? For any services rendered, for services in the course of buying or selling of goods, in case of transactions related to asset, valuable article, things other than securities. Let's suppose property dealers. Do you understand the concept of property dealers? What they do? They charge commission 1% from the buyer, 1% from the seller on the value of property. That will be the property dealer. So this same scenario applies when the person is paying to the property. Even a business is paying. If any individual is paying to the commission to the property dealer, will TDS apply? If an individual is paying for the personal purpose, personal residential property, will TDS apply? The answer is no, because that individual doesn't have turnover of greater than 1 CR or 50 lakhs. But if that individual is doing the business, then it will be applicable. Then TDS will be applicable. Clear? And there is no such exemption of personal purpose here. Personal purpose exemption is only in 194C and J. Non-applicability of TDS under 194H. This section is not for professional services, because for professional services we have separate section. We have separate section for professional services, that is section 194J. Okay. Next. There is no requirement to deduct TDS. Now see, BSNL, MTNL, BSNL also has its public call offices, franchisee offices. Now when BSNL is making payment to the franchisee offices, then they have said, okay, there is no requirement to deduct tax on it. If BSNL is paying any commission to the franchisee offices, then there is no requirement to deduct the TDS. They have exempted it. Now this is an important concept. Again, I will discuss it on the Excel. This is a very important concept to discuss. Okay. Let me take an example. This is page number 7.27. Okay. Give me 1 second. Advertising agency. Sorry, 1 second. I'm facing some problem in the Excel. Okay. Now, let's suppose there is a client. There is a client. There is a company, let's suppose, or the client I say, that wants to run ads on the TV. That wants to run ad to the TV. Now, normally, do they directly approach to the television channel? Let's suppose that you want to run ad on a news channel Aaj Tak. Let's suppose you want to run an ad on Aaj Tak. Do you directly reach out to the Aaj Tak, or you will reach out to the advertising agency? Everyone, please answer. Will you directly reach the Aaj Tak, or you reach the advertising agency? You will go through an agency, right? So you will pay commission to the advertising agency. Sorry, you will pay. One second. You will pay for the work, not the commission. So if you are paying for the advertisement, is it covered in 194H or 194C? Is it covered in 194H or 194C? You tell me. If you are paying the advertising agency, it is covered in 194C, because in work the advertising was the first thing included. If you will see the definition of work, the advertising was the first thing included, right? So you are paying for the work to the advertising agency. Section, will TDS be applicable? TDS will be applicable under section 194C. I don't know why the Excel is, I'm not able to operate it well. Now there will be TDS applies, 194C TDS applies. Next, now will this advertising agency run on the TV, or they don't own the TV channel? They will pay to the TV channels. They will pay to, let's suppose they will pay to the TV channel Aaj Tak. Will TDS apply on this? Will TDS apply on this? There will be no TDS over here. There will be no TDS on this. There will be no TDS on this. Okay. The circular has clarified there will be no TDS on this, right? Now, another query comes. So this was about 194C. Another thing comes. Sometimes what happens, TV channels, they give some discount to the advertising agency. They give some discount for booking. TV channel gives discount to the advertising agency for booking so that they can increase their business. They give some discount. They give some agency discount for booking. On this, the TDS will not apply. On this also, TDS does not apply. Here on this, why 194H is relevant here? This discount can be in the form of commission. This discount can be taken in the nature of commission, but they have specified that TDS doesn't apply in these cases. The TDS doesn't apply in these cases. Right? Now let's read the book, you will understand it better. Applicability of TDS provisions on payment by television channel and publishing houses to advertising companies for procuring or canvassing advertisements. They are saying about this, right? Now there are two types of payment: payment by client to the advertising agency, by the advertising agency to the television channel. Firstly, they are talking about this scenario. On the first, TDS applies, second, TDS doesn't apply. The applicability of TDS on this payment has already been dealt in this circular. It is 194C. There will be TDS will be applicable on the first type of payment. On this first payment, the TDS will be applicable, and the second, the TDS is not applicable. And there will be no TDS under section 194C on the second type of payment. However, another issue has been raised in various cases as to whether the fees or charges taken or retained by the advertising companies from the media houses for canvassing or booking the advertisement, typically 15% of the billing. Now, what they do, now let's suppose Arthur does the billing to the Arthur does the billing on that day earn the commission. Now, TV channel is paying commission to the advertising agency. Now, on this also the TDS doesn't apply. They have already clarified. For 194, the CBDT has clarified no TDS is attracted for booking or canvassing or advertisement. It is also further clarified this does not refer to the media companies, to the advertisement company for booking or advertisement. You can just read it. The TDS will not apply. Okay. This is not relevant to the issue of TDS. Clear? Is this concept clear, everyone? In case of advertising agency, what happens? Next. This example is a very good example. You can do it. Please do it. This is important. This is important. Okay. Next. Advertisement agency given to Ashtak, not a, yes, there is no TDS here. When advertising agency is paying to Ashtak. Rent. Now there are two sections of the rent. There are two sections of the rent. One is 194I, one is 194IB. Where it's again very simple. See, these are transaction specifics. This is 194I. Customer had claimed the insurance at my hospital, so they are charging for the insurance payment for mediclaim. Then on this, a TDS will apply. TDS under 194J will apply. Okay. So this says the CBDT has circular clarified that third-party administrator who are making payment on behalf of insurance company to hospital for settlement of medical claims under various schemes, including cashless scheme, are liable to deduct TDS at 194J. This is because services rendered by the hospital to various patients are primarily medical services, and 194J are applicable to those payments made by TPA to the hospitals. Because whatever services the hospital is rendering, that is medical service. Clear? Next is computer software. Computer software. Now, computer software, we are using the computer software, right? Whenever we purchase any software, do we purchase the entire software? I mean, we just purchase the subscription rights, right? Whenever we purchase any software, we purchase it, we purchase for the use of it. It is called royalty. It is called royalty. So if we are purchasing any software on this, what is royalty? Royalty includes transfer of all or any of the right in respect of the property or information. Whenever I am purchasing any software, I am purchasing a right to use the software, right? So in this, consequently, the provision of TDS will be attracted in consideration for use of right to use the software. If I'm using the software, I'm paying for the software, the TDS will apply. Next. This concept is, let's suppose there is Microsoft India, let's suppose. Now, if I purchase the software, this is a company. This company is purchasing software from Microsoft India. This company will pay for the software to Microsoft India. This company pay for software purchase. Will they deduct the TDS? Will they deduct the TDS? Will they deduct the TDS? The answer is yes, TDS applies. Now let's suppose, now what happens? Microsoft doesn't sell to all the small customers. They have resellers. They have resellers. Resellers of the licenses, like the agents, you can say. When the reseller purchases, let's suppose reseller purchases 1,000 licenses. Will they use it for themselves? The answer is no. They will further sell it in the market. If reseller is paying to Microsoft India, TDS will apply. When I, as an individual customer, am purchasing from a reseller, if I am purchasing from a reseller, right? Now, if I purchase through reseller, will TDS apply again? Do I also need to deduct the TDS? Let's suppose I'm a businessman. I'm covered. My turnover is greater than 1 CR. Will I need to deduct the TDS? The answer is there is a clarification, no TDS required, because already TDS has been deducted. Ideally, the TDS was required, but the circular has said, okay, there will be multiple layers of TDS, so TDS is not required here. Provided this reseller is not doing any modification in the software. See, they say, accordingly, where a company is a payment is made by the transfer for acquisition of software from a resident transferor, the provision would not be attracted if the software is acquired in the subsequent transfer. So it is a subsequent transfer first to reseller, then to this person. Without any modification, important. And the TDS has been deducted on 194J for the previous transfer. Here 194J is applied, so here 194J will not apply. The transferee obtains a declaration from the transfer. The tax has been deducted along with the PAN of the transferor. Clear? So this is section 194J. I hope it's clear till here, everyone. Are you with me till here? I hope the speed is fine. You are able to understand. Okay, done. Next. 194M. See, now the government says there are 3 sections. If I am an individual, let me take a scenario. I am a HNI. I am a good high net worth individual. HNI means high net worth individual. It means high. I am high net worth individual. I am having a lot of money. I am designing a house. Sorry, I'm getting my house constructed. I'm getting my big house constructed. Okay. I'm getting construction of my house. Now I'm getting done the interior designing work of the house. I have hired an interior designer. Now these are for the big persons. This section is for big persons. I've hired an interior designer. I am paying the designer 60 lakhs. I am paying the designer 60 lakhs. Will TDS apply in this case? Will any other section apply? This will be counted as work. Will 194C apply? Will 194C apply here? Think, will 194C apply? It is a personal contract. Then Lakshmi says correct. It is a personal contract. Will 194C apply? The answer is no. 194C will not apply. But the government wants to track this. They say, if this contract is not covered in 194C, then, and if the payment amount is greater than 50 lakhs, the amount is very big, 50 lakhs, then 194C will apply. Then 194M will apply. Payment by individual HUF, because all other assets are covered. For work by way of commission, brokerage, or fee or professional service. 194M. 194M provides for deduction of tax at source at the rate of 2% by an individual HUF responsible for paying the sum during the financial year to a resident, carrying out any work, including supply of labor, or carrying out any work in the pursuance of a contract. Any work, commission 194H, and professional service 194J. If they're not required now, time of deduction credit earlier, the limit is 50 lakhs. Now, non-applicability of TDS under 194M. If 194C is getting attracted, or 194H is getting attracted, or if 194J is getting attracted, then TDS is not under 194M. So if 194C is there, J is there, H is there. Either these apply, or if these do not apply, then 194M applies. But the limit is 194M is very big, 50 lakhs. 50 lakhs. Clear? Again, this is on individual HUF. The government will not say you need to file returns and all. There is no requirement to obtain PAN number. You can directly file using the PAN number. Clear? Good till here, everyone. Now this question, let's take a quick break. We are taking a break early. Okay. Let's take a quick 10-minute break. Then we will start with the, let's take a quick 10-minute break. It's 12:14. We'll start at 12:25, right? Then we will start with the next section. Okay. Everyone, are you with me till here? Are you able to understand? Are you enjoying the discussions, right? So we will meet in 10 minutes. Okay. Thank you. Can we start? Okay, so let's go. So, okay, let's do this question. Mr. Ganesh, on individual capacity, an individual small business turnover less than 1 CR paying fees to CA whose turnover is more than. No, we are not looking at the turnover here. We are not looking at the turnover here. First of all, okay, Dhanlakshmi is saying a good question. Let me take this up. Let me see if I'm able to copy it here. See here. You are asking, I'm a small businessman. It's fine. You are a small businessman. First of all, you see you are covered in 194J. The answer is no. So you can be covered in 194M. Now you are paying fee to a CA. Whose turnover? Are we looking at the turnover of CA? The answer is no. How we will know the turnover of CA? You cannot know the turnover of CA, right? You can know the turnover of yourself only. So if this is the client is paying to CA, we need to see the transaction amount. We need to see the year amount. If within the year I have paid to the CA more than 50 lakhs, getting it? Then Lakshmi. So we are not looking. It is the value of the transactions during the year. If you are paying more than 50 lakhs, then 194M is applicable. Okay. Mr. Ganesh, an individual carrying on retail business, turnover 2.5 crores. Turnover is 2.5 crores. Is this person covered in 194C? Sorry, 194 contract payment for repair of residential house. This person has made, now this is the one person, he has made two payments. Okay, first payment he has made for the payment of residential house. Is this covered in 194C? First of all, is this payer covered in 194C? Is this payer covered in 194C? First of all, but the transaction is not covered in 194C. It means 194M applies whether the payer is not covered in 194C or the transaction is not covered in 194C. 194M applies. So 194C is not applicable. 194 will be applicable. Is the payment exceeding 50 lakhs? The answer is no. So no TDS applies. No TDS applies. Right? So TDS 194C is not attracted. 195 or M is also not attracted. Let's see the last scenario. Let's see this second last scenario. Third scenario, Mr. Satish, a salaried individual. He is paying the brokerage. He is paying the brokerage to buy a residential house in March 2026. The brokerage amount is 51 lakhs. Is TDS applicable in 194H? Is salaried person covered in 194H? The answer is no. So they will be covered in 194M. Right? They will be covered in 194M. Now TDS will be applicable on how much? And the rate is also not given. We will use the rate of 194H. We will use the rate of 194H. How much will be the TDS amount? How much will be the TDS amount? 51 lakhs into 2%. So it will be 51 lakhs into 2%. Clear? Next, 194N. Now tell me, till now, whatever sections we discussed, there was income of the recipient. Till now, whatever sections we discussed, whether it is professional fee, commission, it is income for the recipient, whosoever was receiving the income, right? It was the income of the recipient, everyone. If payer is paying, to someone else, whatever sections you studied, let's suppose employer is paying to the employee, will it be income for the employee? If client is paying to the CA, is it income of the CA? Is it income of the payee or the recipient? Yes. Now there is a section cash withdrawal. This is unrelated to the income. This section is not related to income. 194M. Let's suppose I go to bank. And I withdraw the cash. I do the cash withdrawal from bank. I had money in my account. I am doing cash withdrawal from bank. Is the withdrawal my income? Is the cash withdrawal from my own account is my income? The answer is no. I can withdraw as much money as I have in my account. So there is no income. Cash withdrawal is not income. But the government is now levying to control the cash. The government is levying the TDS on the cash withdrawals. The government is levying the TDS on the cash withdrawals. They say, if you will withdraw from the bank, this is bank, this is you. Again, this is applicable to any person. If you withdraw, and there is no individual HF limit here, it is applicable to everyone. If you withdraw from bank, whether you are salaried, whether you are not salaried, whether you are businessman, to everyone it is applicable. If you withdraw in excess of 1 CR, if you withdraw greater than 1 CR from bank, then TDS at the rate of 2% is applicable. Now, I told you two sections where the TDS is applicable in excess of amounts. What does it mean? Let's suppose I withdraw from the bank 1 crore 20 lakhs. On how much TDS will be applicable? It is only TDS. This is withdrawn 120 lakhs. TDS will be applicable only on 20 lakhs. That is in excess of 1 crore. This is one section to note where you write the amount in excess of 1 crore. Very, very important thing. (194N). Now you should have filed last 3 years returns. You should have filed last 3 years tax returns on time. It is last 3, not 2, 3. You should have filed last 3 years tax returns on time, within the due date or within the original due date, on time. Then above is applicable. If last 3 returns not filed or not filed on time, either they're not filed or you have not filed timely or not filed on time, then below applies. Then the limit instead of 1 crore will become 20 lakhs. So up to 20 lakhs, no TDS. Up to 20 lakhs, no TDS. After 20 lakhs to 1 CR, 20 lakhs to 1 CR, the TDS rate will be same, 2%. 2%. But after 1 CR, the TDS rate will become 5%. Too high. Whenever you're withdrawing your own money, the government is taking TDS on it. Clear? So, this is a provision. Everyone, is that clear? Now, this is the case if recipient is, write one thing, if recipient is cooperative society, if recipient is cooperative society, then instead of 1 CR, the limit is 3 CR. Rest all the same. limit is 3 CR if recipient is cooperative society. Then instead of 1 CR, the limit is 3 CR. And here it will be up to 20 lakhs, 0%. 20 lakhs to 3 CR, it will become 2%. And greater than 3 CR, it will become 5%. This will be the answer. Amathili, is that clear? Sorry, it is greater than, sorry. It is greater than 1 CR. Minor typo. It is greater than 3 CR. Yes, it is the aggregate of the withdrawals during the year. Clear? Any queries? This is a very important section. So you can just quickly go. It is when you withdraw money from banking company, cooperative, post office, exceeding 1 CR, 2%. Time of deduction whenever you withdraw. If you don't furnish last 3 years returns, it becomes 20 lakhs. And 3 crores in case of cooperative society. 2% and 5% rate, which I have already told you. Non-applicability. Non-filing cases, entire 20 lakh, up to 20 lakh, it's zero. It's zero. Let's suppose you withdraw 19 lakhs or 20 lakhs, still 20 lakhs, it is zero. You withdraw 30 lakhs, first 20 lakhs, zero. Next 10 lakh, 2%. You applied slab wise. Non-applicability in TDS, if government is withdrawing any money, or banking company or business correspondent or any ATM operator is withdrawing any money, then there is no problem. On that, no TDS is there. On that, no TDS withdrawal is there. Okay. Now this is the good example. You can do it. I'll just take 1 or 2 questions in it. Now it says in 1 to 6, assume the returns are filed on time. In 7 to 10, assume they're not filed the returns. First, let's suppose do this cooperative society. They have withdrawn 2 crores 70 lakhs. They filed the returns on time. The limit is 3 crores. So no TDS is there. No TDS is there. Next, now in 7 to 10, we assume that TDS returns have not been filed on time. Mr. Varun, he has withdrawn 1,20,000, 1 crore 20 lakhs. So up to 20 lakh, nothing. Next 80 lakh, 2%. Next 20 lakhs, 5%. So this is how you calculate the TDS. Are you with me till here, everyone? Are you with me till here? Okay. See, now there are many, see, if you will see practically, there are many TDS provisions. We have studied a lot of provisions, but there are a lot more provisions. If they would have given all the provisions in such detail in your book, this chapter is of 132 pages. This chapter would have crossed 200 pages. What they have done is, for some of the sections, they have given some summaries, and we need to cover it from the summaries. They have just given the basics when it is applicable, when not applicable. So we need to cover it from the summary. So they have not given all the details of these sections, okay? But they have covered the important points of these sections. Let's see it. (192A). If you withdraw money from the provident fund, is that taxable or non-taxable? If you withdraw money from the provident fund, is that taxable or non-taxable? Everyone, do you know about it? During the if you withdraw before 5 years of continuous service, if you withdraw before 5 years of continuous service, it is taxable. But If you withdraw after 5 years of continuous service, it's non-taxable. Another thing, if you withdraw before 5 years, but it is due to the ill health or some reason which is defined, then it is again non-taxable. If you withdraw after 5 years of continuous service, non-taxable. Before 5 years of continuous service, it is taxable, but non-taxable if it is due to the ill health and other scenarios, right? Or let's suppose earlier you were working in company A, now you are working in company B. You are transferring your PF from one company to the other company. Is that taxable? You are transferring from one company PF from one company to other company. It is non-taxable. Clear? So it says if the PF authority and PF scheme is providing you, now see, if it is withdrawal after 5 years, then always it's non-taxable. Will the question of TDS arise if it is non-taxable? Will the question of TDS arise if it is non-taxable? Now they say when it is non-taxable after 5 years, or they transfer within the one employee to other, one employer to other employer, or if it is to the bill health, then it is non-taxable. Now if it is taxable, then if the amount is greater than 50, there is a TDS of 10% to be, deducted. Now I'll tell you my personal case. So I used to work, I became chartered accountant. After that, I joined a company. Now I worked there for 2 years. My PF was deposited, but after that, I had taken up one more job, but in total, my job was of 3 years only. After that, I started my own practice. Now tell me, I have withdrawn money from the PF account. Will that be taxable or non-taxable? It will be taxable, right? So it was taxable to me, and the TDS of 10% was deducted. It was coming in my 26 years, TDS of 10% was deducted on it. Okay. The payment was exceeding 50,000. The TDS was deducted on 10%. Next, dividends including preference shares. Now, if there is any dividend, including dividend on preference shares, if you're getting any dividend on that 10% TDS is there, but if it is only exceeding 10,000 is the limit. 10,000 is the limit. Now there are two things about this limit. If the dividend is received by the individual or others. If dividend is received by the individual, there is a limit of 10,000. And that too, if dividend is received other than cash. If dividend is received in cash, there is no limit, zero limit. Every time TDS is applicable. And in case of others, always the TDS is applicable. There is a limit of 0. Always TDS is applicable. Clear? In case of individual, TDS not applicable. In case of others, TDS always applicable. In case of individual, if person is receiving the dividend by cash other than bank, then in that scenario, even the 10,000 limit will not be available. Okay. 194B, lottery income. What is the tax rate for lottery income in other sources? 30%. Same way, they have levied a 30% TDS here. If in a single transaction, the winning is greater than 10,000 rupees. If in a single transaction, the winning is greater than 10,000 rupees, then there is a TDS applicable for 30%. Clear? Now tell me, if winning is in kind, have we discussed this case? If lottery winning is kind, we have discussed this case in online games, same provisions will apply. We have discussed in online games. Let's suppose you have won a car in a lottery, then either the winner pay the tax and give the challan, or the winner pay the amount to the deductor and the deductor will pay the challan. But deductor has the responsibility to ensure before handing over the gift. If it is in cash or in kind, right? So the same provisions applies. Race horses. Again, this income is taxable at which rate? In a single transaction greater than 10,000, if this income is taxable at which rate? 30%? 30% TDS will apply. 30% TDS will apply. 194D insurance commission. Now all other commissions were covered in 194H. Now if there is an insurance commission, you are an insurance agent, the company will pay you insurance commission. If it is greater than 20,000 in the financial year, now 2%. If it is a non-corporate, in case of corporate person, the rate is 10%. This TDS is deducted. 194DA. Have you studied section 1010D? Have you studied section 1010D? Life insurance policy matured, whether that is taxable or non-taxable. Everyone. Let me show you the section quickly. I'm just opening it here on a section 1010D. See here. If you receive any sum under the life insurance policy, under subsection 3 under Keyman insurance policy, right? Or under receiver policy where the term insurance premium doesn't exceed 10%, right? So in these scenarios, it was taxable. But if other than these scenarios it is there, then it is non-taxable. It is non-taxable, right? You have already studied this section. Tell me, if something is exempt under 1010D, should TDS be deducted? Now, it is when the maturity of the policies. If TDS is deducted under 1010D, sorry, if income is exempt under 1010D, TDS should not be deducted. That's why there is exemption from TDS. If 1010D is exempt, no TDS. But otherwise, if you get an insurance amount, if you get an amount from an insurance policy not fulfilling the conditions of 1010D, then if the amount exceeds one lakh, then there is a 2% TDS on the maturity of the life insurance policies. Commission on sale of lottery tickets. See, one commission section we have studied is 194H. H was for other commissions. Then we have discussed one section here, insurance commission 194D. That is for insurance commission. Then we are discussing one section on G, commission on sale of lottery tickets. The person who is selling the lottery tickets, they will get the commission from the lottery company. Greater than 20,000 per year, 2% TDS. 2% TDS. 194 IA, please mark it as important. The high chances the question are asked on it, and also it is important from the practical perspective. Let's suppose IA. One 194 IA says, let's suppose an individual purchases an immovable property. An individual purchases an immovable property from another person. This is the buyer. This is the seller. The deal is of immovable property. If buyer is purchasing an immovable property from the seller, buyer the rate of 1% or stamp duty value is greater than 50 lakhs. Is greater than 50 lakhs. Then TDS is required to be deducted at the rate of 1%. So it says if greater than 50 lakh is the value, consideration for stamp or stamp duty value, any person being a transferee other than person referred to in 194 LA for compulsory acquisition, for which we have separate section. So if resident transferor, resident seller, the 1% of the stamp consideration of the stamp duty value, whichever is higher. Again, let's suppose this individual doesn't have PAN number. For this transaction only, will the government ask him to take the PAN number? For this transaction only, will the government ask him to take the PAN number? The answer is no. Even there is no requirement to take the PAN number. No requirement of taking the PAN number, 10 number, sorry, 10 number. There is no requirement to take the 10 number. Even without 10 number, this form can be filed. And if with the what does consideration of the property includes? Immovable property means if you're paying any club membership fee, parking fee, anything in whatever name you're paying, all that please club everything. You can need to club everything and then take the action. Then include it, and on the total amount you need to deduct the TDS. Clear till here, everyone? $194K income on mutual fund units. If you have purchased the mutual fund units, you are having dividend income on it. If you are having dividend income on the mutual fund units, then greater than 10,000 in the financial year, 10% TDS. Greater than 10,000, 10% TDS. Next, 194 LA compulsory acquisition of immovable property other than agricultural land. If there is a compulsory acquisition, is that taxable? Compulsory acquisition is taxable under which head normally? Capital gains. Normally capital gains, right? So if there is a compulsory acquisition amount greater than 5 lakh you are receiving, then if it is other than agriculture land, then 10% TDS is there. 10% TDS is there. Now this is again a good concept. 194B pension along with interest on bank accounts. If you are receiving pension from, if the bank is paying you the pension under this act, if you are receiving pension and your pension is, give me 1 second, 194P. Let's discuss it here. 194P. P for pension. If you are receiving pension, again the calculation is like you do in the section 192 salary. This is like salary. Calculations in this section are like salary. They say if you are a senior citizen, this is only for the senior citizens, and you are receiving pension, and your pension is less than basic exemption limit, then there is no TDS. If it is greater than basic exemption limit, then the TDS applies. TDS, how it will apply? You will calculate the rate of tax. You will calculate the rate of tax like we did in the salary head, and based on that rate, every month you will deduct the TDS from the pension. Then whatever is the tax divided by 12 equal to every month deducted from pension, right? This is how the TDS applies. Now, what is this basic exemption limit? If we are following the old scheme, what is the basic exemption limit? If we are following the old scheme, then Lakshmi says 2,50,000. If we are following the old scheme, what is the basic exemption limit? Yes, correct. Vishakha, Harshal, Anil, wrong. We are talking about senior citizens. The limit is 3 lakhs. In case of new scheme, what is the limit? Is there any differentiation of senior, non-senior in the new scheme? The answer is no. There is 4 lakh. So if the pension is greater than this, then only the TDS applies, otherwise no. Another thing it says, we will also study in the return filing chapter. If you are a senior citizen, you have income from pension and interest income plus interest income, and both you get from same bank, and TDS is deducted. You are getting both the incomes from the same bank and TDS has been deducted, then no requirement to file tax return. Then there is no requirement to file tax return. Clear? Then there is no requirement to file the tax return. Let's see this in the book. Pension along with interest on account, basic exemption limit 4 lakh, 3 lakh or 5 lakh, super senior it's 5 lakh. You are getting from the notified specified bank, specified senior citizen is getting rates in force as per the old scheme or new scheme, whichever you follow. What is a specified senior citizen? Means an individual being resident in India. Okay, so this is for the sorry, this provision is for the not for senior but for specified senior. Please add the word specified senior. This is for 75 years or above. This provision is only for 75 or above. 75 years or above. Clear? If you are 75 or above and you're having pension and no other income except interest income, and that you've received from the specified bank, then you give declaration to the bank, and then in that scenario, entire tax is deducted. Then there is no the section 139 would not apply. There is no requirement to file the return of income. Clear? Is everything clear till here, everyone? Are you with me till here? Is the speed fine? I'm already speaking slow, right? So is this fine, right? Because I don't want to make it like I don't want to speak fast and make it a burdening for you. Okay, 194Q. This is again important. The questions are asked frequently from this. Yes, 194Q is the common TDS section. Now, what is there in this section is 194Q. 194Q. 1 minute. 194Q is for purchase of goods. Purchase of goods. Now, for purchase of goods, if let's suppose you are a buyer, and you are a specified buyer, it means your turnover, now this time your turnover exceeds 10 crores. Your turnover exceeds 10 crores. Very important. Now you are a buyer, your turnover exceeds 10 crores. Then in that scenario, you are paying to any resident. You are purchasing goods from the seller. You are paying to the seller. If you purchase the goods, now first of all condition is turnover exceeds, buyer is the specified buyer whose turnover exceeds 10 crore. Here the 1 crore criteria is not there. If there is a payment of greater than 50 lakhs, there is a purchase of greater than 50 lakhs, then TDS is required to be deducted at 0.1%. 0.1%. of the sum exceeding 50 lakhs. Can you see here? This type of provision we had studied in cash withdrawal, and this is the second time we are studying this provision where the TDS is not applicable on the entire amount. TDS is applicable only on the sum exceeding 0.1% of the sum exceeding 50 lakhs. Now there is a good question on this. We will do a question as well. If let's suppose I do a purchases. First, let's suppose I do purchases in the March. The buyer is specified by buyer turnover is greater than 10 CR. In March, I purchase for 20 lakhs. In May, I purchase for 20 lakhs material. Then for 20 lakhs. Now here no TDS. Here no TDS. Here TDS applies, but TDS will be applied on how much? The amount is, let's suppose it is 30. Let's suppose it is 25 lakhs. TDS will be applicable on how much amount, everyone? Can you tell me TDS will be applicable on how much amount? No, Anil, 65 minus 50. 15 lakhs. On 15 lakhs only. Clear? In excess of 50 lakhs. Clear? Now next, let's suppose in July, again 25 lakhs is there. TDS applies on entire 25 lakhs because the limit is already crossed. Okay. Let's see this. So greater than 50 lakh you purchase. Buyer is the person who is greater than 10 CR turnover. Any resident 0.1% of the sum exceeding 50 lakhs. This is important. Non-applicability of TDS. Here the TDS is not applicable when TCS is applicable. This section you will study further. Then you will get to know. 194R. Tell me, if a company is giving, your employer is giving to the employee, let's suppose he is the CFO of the company. This employee is CFO of the company. The employer is giving to the CFO a holiday package. They are giving the holiday tickets, holiday package to the CFO as a gift. Is this taxable as perquisite to the CFO? Is this taxable to the CFO? The answer is yes. Will there be TDS on this? Yes, non-monetary perquisite, TDS will apply. TDS will apply. Now let's suppose insurance company, this is very common. Insurance company gives, agents are not the employees. Agents are not the employees. Agents are not employees of company, not employees. Insurance company gives agents free holiday trips. Will the TDS apply on this? Is there any section covering this? There is no section for this. That's why they introduced. See, for salaried people, perquisites are covered, but for other people, the perquisites are not covered. They introduced section 194R. This is a perquisite. On this, the TDS will be applicable. TDS applies. Clear? So it says any perquisite, whether convertible into money or not, arising from business or for the exercise of profession. Amount is greater than 20 lakhs. Again, any person other than individual HF exceeding 1 CR 50 lakhs, same thing. 10% of the perquisite value of the TDS is required to be deducted. 10% is the rate. 194R is important. Please mark it as important. Next, 194T, very new section. This is applicable from this year only. from previous. This is important. This can be asked. This can be asked because this is applicable from current year only. Previous year 25-26, right? If the partnership firm is paying salary, bonus, commission, interest to the partners, and that is exceeding 20,000, then 10% TDS is required to be deducted. If the partnership firm is paying salary, interest, remuneration to the partners, and that is exceeding 25%, then the 10% TDS is required to be deducted. Clear? Is it clear till here, everyone? Okay. So these were the TDS sections. Now these questions you can do. I'm not taking up these questions because already we have a lot to cover. Do this as well. If you face any queries in the questions, you can surely ask me in the next session, okay? Dhanlakshmi, for which partnership firm pays to partner? Dhanlakshmi, partnership firm is paying interest to you or remuneration to you. It is taxable to you. But partner getting salaries under PGB, yes, partner is getting salary under PGB, that's not a problem, right? On the profits, that TDS is not there. Can you see it? This is on the salary, remuneration, commission, bonus, and interest. The profits are not there because profits are non-taxable to the partners. Partnership firm pays the tax, right? Illustration number 12, you can do it, homework. Illustration number 13 also very, very simple. I've already taken this example. 194Q. Now, till here we have covered the TDS sections. Now there are some theoretical sections of the TDS we need to cover, right? So till here we have covered the TDS sections on what transactions the TDS is applicable. Are you comfortable on the TDS? If you will see, there are small provisions that we covered. One section we have covered, that is done. Then we go to the another section, right? So that way, these are small sections that we cover, multiple sections, but sections are many. See, TDS concept, the government has introduced new sections again and again, and the TDS concept has become so big now, to be true. Earlier, the concept was not so big, but the government introduced sections in Finance Act, one or the other sections they have introduced at multiple places. Now the TDS concept has become big. Next, income payable net of tax. Now tell me, if a client is paying to the CA 1 lakh, they will pay 90,000 to the CA? 195A. If a client is paying to a CA 1 lakh, 1 lakh they have to pay. They will pay 90,000 here. How much will be the income of the CA? 1 lakh or 90,000? How much will be the income of the CA? 1 lakh or 90,000? Income of CA is 1 lakh. Everyone, but CA will say I have received 90K only. CA will say I have received 90K only. I will pay tax on 90K. The answer is no. 90K received. 10K is considered as received. It's considered as received because that is paid on your behalf to the income tax, right? 10K is considered as received, so you need to pay tax on 1 lakh. Another thing. Let's suppose this is Mr. A, this is Mr. B. Mr. B says A is receiving services from Mr. B. A is paying for services to Mr. B. A is paying for services to Mr. B. Mr. B says, I want 1,20,000 in my hand. Normally this happens when you do the transactions in foreign, but I'm not taking the example of the foreign. because that section is not covered here. Normally this happens when you are in foreign, right? When you make payments in the foreign country. Now the B is saying, I want 1,20,000 in my hand. Whatever you show is your problem. Now B is saying, I want 1,20,000 in my hand. Now ultimately how much A should pay? Can I say if B is wanting 1,20,000 in hand, that is equivalent to the 90% portion if TDS rate is 10%? Can I say this is equivalent to the 90% portion? So what Mr. A will show, the total amount is this much. From this, the 10% TDS is deducted and the net paid is this much. So Mr. A needs to do the grossing up. Mr. A needs to do the grossing up. It is the total. This is the TDS. This is the net. So Mr. A is grossing up for the taxes here. Can Mr. A just do one thing? Maybe, okay, let me do it 1 lakh. Let me do this figure to be 1 lakh. Okay. Let me change the figure to 1 lakh. Can Mr. A do one thing? He will say, okay, 1 lakh is the amount, 10,000 is the TDS, 1,10,000 I will show. Is this possible? Can Mr. A show like this? The answer is no. He will have to do the back calculation, because if he will calculate the taxes like this, if he will take this amount as 10,000, he will, if he will take the total as 10,000, 1,10,000, then the TDS is 11,000, then ultimately the net amount is coming 99,000, but they have already paid 1 lakh. So this is incorrect approach. You need to gross up like this. You need to gross up like this. This is incorrect. Clear, everyone? Okay. So this point also I have covered. It is whenever you receive this point was this, I want the CS income will be 1 lakh, right? Now, whatever 10,000 TDS is deducted, that is considered as received. Next, no grossing up happens in case of employer perquisites, non-monetary perquisites, because that is non-taxable to the employee. And when the amount is paid net of liability, TDS has to be deducted by grossing up the amount. We have done how the grossing up is done. We have seen how the grossing up is done. Clear? Next. Interest or dividend or other sums payable to government. If any sum is payable to the government, then no deduction is to be made. This is the special provision. Then section 197. See, let's suppose you are payer, you are pay. Now, pay has given services for 5 lakh. Pay's income is only 5 lakhs. Will there be any tax on this? Pay's income is only 5 lakh. Will there be any tax? How much will be the tax on this? 0. New scheme 0. Right? Now, but still, as per TDS provisions, pay knows my income will be in 5 lakh and my tax will be 0. But as per TDS provisions, payer will deduct TDS. Right? Because if payer will not deduct the TDS, he will be at default. Pay knows my income will be 5 lakhs and the tax will be 0, but still as per TDS provisions, payer will deduct the TDS. Now, what pay can do? Pay can request assessing officer for lower deduction certificate or no deduction certificate. Lower deduction or no deduction certificate. If at a lower rate the TDS is to be deducted or no deduction is to be made, the pay can request, and the assessing officer will see your case and they can give you this certificate. So this section applies in case income of a person. Income tax is required to be deducted, but assessee can make an obligation to the assessing officer for the lower rate or no deduction of tax. If the assessing officer is satisfied, the total income of the recipient justifies the deduction of total income at lower rates or no deduction of income tax, as the case may be, he may give the assessee such certificate as may be appropriate. Clear? They can apply to the assessing officer. Next, where the assessing officer issued such certificate, then the person responsible shall deduct tax at the lower rates. Let's suppose instead of 10% they write 5%, then payer will deduct at 5% only. No deduction in certain cases. No deduction in certain cases. In some cases, no TDS is to deducted. In case of dividend income, if you give, okay, your income will be, your income is not taxable, then you can give form 15G. There is a form 15G which the recipient can give, and they can estimate the tax liability to be nil. Then they can give form 15G. The payer will not deduct the TDS in respect of dividends. Now, enable provision of filing of declaration. If this form 15G is received, sorry, okay, this is again for another section 192A, 193, 194A, D, and all. Again, if you receive 15G, there will be no TDS deduction. Filing declaration not permissible if aggregate income exceeds basic exemption limit. Let's suppose your income is, you're going to have dividend income and you only have dividend income. Your income will be 2 lakhs. Can you give form 15G? You can give form 15G. Because your liability, and you can say your liability will be nil, and so no tax is to be deducted. Clear? The tax will be nil. Let's suppose your income will be 6 lakhs. What will be your tax liability? Your income will be 6 lakhs. Still the tax liability will be nil, because after considering rebate and all, the liability will be nil. But can you give form 15G? No, you cannot give form 15G. So form 15G can be given only if it is less than the basic exemption limit. Only if income is less than the basic exemption limit, then only the form 15G can be given. Clear? Next, but in case of senior citizen, even in this scenario, you can give form 15G. If tax is nil, even if income is greater than basic exemption limit, you can give form 15G and no tax will be deducted. Is this clear, everyone? So this is was covered in here. This is deduction cannot be given if it is below the basic exemption limit. Not permissible if it is exceeding basic exemption, but in case of senior citizen, they are giving some relaxation. Then if the government notifies for some class of persons lower rate, then they will follow the lower rate. And if you receive 15G form, then you need to submit it by the 7th of the next month in which the declaration is made. You need to file online. You need to file these forms online with the commissioner or principal commissioner. Clear? So we are done till here. Any doubts? Can we move ahead? Everyone, are you with me or you are tired? I know we have covered a lot. See, what we need to cover here is we need to cover these 4-5 pages. I think till here we will cover. So do you want a break, 5-minute break, so that you can refresh yourself? Approximately, it will take me half an hour to complete it. Okay. So we will continue for next half an hour. Do you want a, sorry? Someone is saying something. Okay. So let's take a quick, I'm giving you quick, I'm here in the session only. I'm giving you a quick 5-minute break. Quickly come back because I need half an hour for this so that you don't get tired. Okay. It's 1:21. Quick 4-minute break. We will start at 1:25. Okay. We will start at 1:25. Okay. Everyone, please start. Okay, can we start? Anchal, Tanu, Sridhar, everyone, are you back? See, next is TDS deductor is income received. Whatever TDS is deducted, now in my case, 1,90,000, 1 lakh was income. So TDS deductor is also income that is received. Credit for TDS. Now we know if TDS is deducted by the payer, it will reflect in, for the pay, it will reflect in which form? It will reflect in which form of the pay? I told you. Now I will be able to take the credit for the TDS, whatever is deducted for me, but in which form? Form 626 AS. Form 26 AS, okay? Form 26 AS. Now, CBDT can make the rules and all. Duty of person deducting the tax. The person who is deducting the tax, they need to deposit the tax. What is the due date of the tax deposit? 7th of the next month. Voice is very low. Is it fine now, Amar? Amar, is it fine now? I think the mic was pushed downwards. Okay. So the person responsible for deducting the tax should deposit the tax. See, let me tell you the due dates. Every month you deduct the tax. By the, let's suppose for April till February, for these 11 months, by the 7th of next month, you deposit the tax. You deposit TDS. By the 7th of next month, you deposit TDS. And in March, for the month of March, you get till 30th of April. Because there are many calculations to be done at March for provisions and all, you get till 30th of April. From April till Feb, this is monthly deposit. And the return filing, the tax return that you need to file, the TDS return is quarterly. You need to file for the first quarter 1, 2, 3, and 4. For the first quarter, it is July 31st after the end of the quarter. Then it is October 31st. Then it is January 31st. For the last quarter, you get 2 months because April 30th is the due date for deposit till May 30th. May 31st is the due date. So it is the duty of the deductor to do all of this. So we say that they should deposit to the credit of central government. Non-monetary perquisites, the employer should deposit the tax, right? And we have seen certain sections where 10 number is not required, like 194 IA property, 194 IA property TDS, 194 IB. IA was for property, IB is for rentals, and then M is for where 194C, J, and H is not applicable. In these 3 sections, the 10 number was not required. So there is a specific forms that you file 26QB, QC, and QD that you file 30 days from the end of the month in which the deduction of tax is there. Let's suppose you purchase the property in May. In May month, you made the payment. From May end, you will take 30 days. So you will, by 30th of June, you need to do it. By 30th of June, you need to file the statement and pay the taxes. Clear? Correction of arithmetical mistakes, computerized processing. See, now everything is online. Whenever the returns are filed, the system will process the return. Let's suppose you have filed a return in 194J, but the rate you have shown is 7%. Will the system flag an issue? You have filed a return, 194J, rate you have applied is 7%. The rate is 10%, but you have applied 7%. Will the system flag an issue? Right. The system will flag an issue and they will create the balance 3% demand. At present, all statements are computerized processed. If there is any arithmetical error or there is any incorrect claim, that will be the automatic system will reply. If there is an arithmetical error or there is an incorrect claim, that will be verified. Incorrect claim means there is an inconsistent with the entry. Let's suppose you have entered a challan, but the challan you have not deposited, you have just entered a fake dummy challan, that will not be accepted. The rate is not in accordance with the provisions of the Act. For 194G, you applied 7% instead of 10%. If you file the return late, these are the return due dates. These are the return due dates. If you file the return late, 200 per day is the penalty. A fee of 200 per day will be levied under section 234E. 200 per day is the penalty for late filing. Then these are very simple points. You can just read consequences of failure to deduct. Now, someone asked me yesterday, if I do not deduct, then I am treated as SE in default. If I do not deduct or I deduct, I do not pay. Right? But if the other person pays, can I be relieved of the liability? We discussed yesterday. Right? If the CA pays, in my case, the client didn't deducted, but if the CA pays, the government will say, okay, if any person who fails to deduct will not be treated as SE in default. If the other person files the return of income, they've included such income and they paid the taxes and the CA certificate is required for to this effect. Then there is no, the client will not be treated as a SE in default. Now tell me two things. Tell me one thing. If let's suppose deductor has, I'm giving you two scenarios. First one, deductor has deducted the tax but not paid to the government. And second one is deductor has not deducted the tax. First one, deductor deducted the tax but not paid to the government. Second one, deductor didn't deducted the tax. Which one is more serious? After deducting, not depositing to the government, or not deducting at all? No, you are wrong. See, let's suppose if I haven't deducted, have I collected the government money? If I haven't deducted, have I collected the government money? The answer is no. If I have deducted the tax but not deposited, I am keeping the government's money with me. Can you see? If I haven't deducted, I haven't kept any money with me. But if I have deducted but not given the money to the government, I'm keeping the government's money with me. That is more serious. So accordingly, if you do not deduct, if there is a failure to deduct, the simple interest of 1% per month is charged. If you have deducted but not deposited, then 1.5% per month is charged. Can you see? If you have not deducted, 1% is charged. If you have deducted but not deposited, you have done a serious crime. 1.5% per month is charged. Clear? You need to pay these interest before furnishing the statements. Next, certificate for tax deducted. Tell me, whenever you deduct any TDS, if you deduct any TDS of the other person, you will give a certificate to the other person. Okay, this much TDS I have deducted for you. The government is informing that person in form 26 years, but the deductor also need to give a statement. Now, I have deducted for this. I am the deductor. I have deducted the TDS for the other person. I need to issue a statement, and that I need to give annually by form 650, form number 16. Have you heard of form 16 A, B, C, D? Form 16. Employer is giving form 16 to the employee. Same way for the non-employers, they will give form 16A. Let's suppose the client has deducted TDS for the CA. The client will give form 16A to the CA. The client will give form 16A to the CA. Okay, 16A. Same way, there are three forms, form 16, B, C, and D. That is for 194 IA, IB, and M. The three sections. So, like the employer gives form 16, the non-employers give form 16A. Now this is a chart given. You can go through this chart. It says, okay, 30th April is the due date. I've told you 7 days from the end of the month, right? Then due date for the returns are also given here. You can just quickly go through this chart, a good chart, summary chart. Next, who is responsible for paying the taxes? For the salary, employer is responsible for paying the taxes, TDS. Interest on securities, whosoever is paying the interest, the principal. For the on behalf of central government, whatever officer is there. On behalf of non-resident, if any sum is payable to the non-resident in Indian, then authorized person. So they've given who is liable to pay the taxes, who is liable. Next is bar against direct demand on the assessee. 6.6. This one, Anil, this one you want me to explain again? Okay, let me take it. See, employer is there. At the year end, employee receives form 16 from the employer, in which all the details of TDS will be there. How much TDS was deducted during the year? How much TDS was deducted? They will give form 16, that is annual. Now, if employer is there, sorry, other than employer, let's suppose client is there. Client is giving fee to the CA. Now, client has deducted TDS. Now, client needs to give form 16A to the CA. Okay, this much TDS I have deducted for you to inform the TDS. Now, this is normally quarterly. This is quarterly. Clear, Anil? That is the concept of 6.6. Is that clear, Anil? Okay. Bar on direct demand on the assessee. If deductor has not deducted the tax, the TDS liability will come on deductor, not on the assessee. Now, this section is important. Please mark it as important. This section is important. What it says? This section says, if let's suppose you have to deduct the TDS and pay it, will you require the PAN number of the other person? The client has to deduct the TDS of CA. Will client require the PAN number of CA? Because ultimately, how the government will know for whom you have deducted the TDS? The government will know by the PAN number. The government will know by the PAN number. So you need the PAN number of the CA to deposit. But let's suppose CA is not giving the PAN number. That CA is not giving you the PAN number. So then if you don't have the PAN number of the deductee, if you do not have the PAN number of the deductee, in that scenario, the higher rate of TDS will be applicable. Because the chances that other person will not file, let's suppose, let me take this example. If payer has to give to the pay, now they had to give 1 lakh, they have given 90K here. Payer is Mr. A, let's suppose this is Mr. B. Now pay is not giving the pen. Now what is the risk? What is the risk the government is having? Can you tell me the risk which the government is having? Maybe the pay will not declare the income. Pay may not show income and may not pay taxes. The government will say, okay, if we will fail to identify the pay, we are not able to identify his incomes. Okay, now we may not be able to collect the taxes later on. We will collect the taxes today. The TDS rates will be higher. TDS rates will be higher. We will collect the taxes today itself. We don't know whether we will collect the taxes in future. So they say if there is a non-furnishing of PAN, non-furnishing of PAN, now it will be a rate prescribed in the act or the rate in force or the 20%, 20%, whichever is higher will apply. Let's suppose that in professional services, the rate is 10% prescribed in the act, in force is 10%. rate 20%. If the pay is not giving the PAN number, the 20% will apply. In case of 194Q, purchase of goods, it is 0.1%. There the rate of 20% will be too much. So the maximum rate prescribed is 5%. For 194Q, the rate prescribed is 5%. Clear? So these are very simple lines you can study. This is the concept of your TDS. We have covered the concept of the TDS. Next session is we will discuss the concept of advanced tax. Advanced tax we will discuss. The next session is on 7th of July. So on Tuesday and Wednesday we have the session. Tuesday we will discuss the advanced tax, and then Wednesday we will discuss the provision for return filing. Clear? So if you have any queries, you can ask. If you want, I can also unmute you and you can ask the queries. That's it for the day from my side. I hope, see, I know I haven't read line by line, but I've explained you all the concepts which are written in the book. Okay, I have explained you all the concepts which are written in the book. Clear? Anil, you want to unmute? You have raised your hand.
Good afternoon, sir.
Yeah, good afternoon.
Sir, could you please tell us some organizations so that we can interlink all these TDS concepts to that organization, and we can more easy and more practical, and we can drill more deeply, and we can remember strongly, like at least 2-3 organizations.
Sorry, come again. What organizations?
Like how to be more practical and how to be strong remembering these tedious concepts.
See, these
Like
TDS concepts. See,
without any confusion.
Anil, I understand all of you will have this problem. See, what I should say. See, normally, see, do you remember the section numbers of the do you remember the section number of the deductions? Everyone remembers it, right? Now,
Yes, sir.
the best way is to write. Why you are able to remember the section number of deductions? Because I have written the things. Here, I have already requested the BOS team to take an additional session for the deductions. Okay, let me be very clear. I've already requested yesterday that one more session be allotted to the deductions. The request has not been approved till now. If the request will be approved, I will solve more questions with you. I will revise this chapter again with you. Okay. So,
Okay, sir. Okay.
but if request is not approved, then anyways we have done with the concepts. That request is for extra revision session for this. If that request is approved, we will take one more session on the TDS. Okay, we will revise it. But
Okay,
ultimately, you need to revise it and write the things. Then only you will be able to
okay, sir. The
memorize it.
only way, the only option. Yes, sir. Okay, sir. Thank you.
Anchal, I know I have two queries pending. This is summary chart I will upload now. About this example, to be true, and this deduction query is also pending. In the next class, I will surely resolve it, because these are the weekend classes. My weekends are totally packed. I have multiple classes. So like I had class in the morning, then I had class in the afternoon, this class, and I also have class in the evening. So I couldn't get time. But yeah, in the next session, I will shortly clarify. I'll give you the example as well. And this class files and the deduction chapter summary, just after the session is closed, I will upload it. But it will not be immediately visible to you because it is approved by the BOS team. So it will be approved in few hours by the BOS team. Then it will be visible to you. Okay. But from my side, I will upload right away after the session. Just allow them some time to approve it. And once it is approved, it will be visible to you. Clear? Any other query? Can we wrap it up for the day? Okay, then thank you very much, everyone. Thank you very much. Meet you on Tuesday. Thank you. Our team, we can close the session. Thank you. Our tech team, we can close the session.
हाँ जी